that's an issue.
Any forecast when it comes to bonds? Is this actually dropping inflation? Like if they let the equities fall and they keep the narrative going about tightening, could they declare victory? Inflation drops maybe a couple percentage points and then maybe ease off on the gas pedal?
I mean, I think if you cause demand destruction, then you can potentially reduce inflation for a period of time, but then the cost is a recession. And so there is a reverse wealth effect, right? If you damage enough value of stocks, houses, and bonds, some segment of society will spend less, and they'll be more uncertain about business plans. They'll maybe hire less, get more slack in the unemployment market, and you even have Fed officials say we might have to cause a recession. Some of them have been saying that, and so what's more politically unpopular, inflation or a recession? So I think that for periods of time they can pull back a little bit on inflation by taking some of the excess demand out. But the supply side's still tight.
Right.
So the Fed can't print oil, they can't print chips, and that takes time. And especially in oil markets, we're not really seeing a supply response yet.
Yeah.
And so I think until we basically have abundant commodities again, we're going to be flirting with inflation for off and on for periods of time.
Why is the real estate market still so crazy? I have friends who are in real estate development or sales, and they still have people offering cash way above asking price, and it feels like we're in a much bigger bubble than 2008, but clearly we must not be.
There's a couple factors. One is, even though mortgage rates have gone up sharply, they're still below the inflation rate. And so it depends on someone's assessment of forward inflation, right? If they think inflation is going to come down a lot, maybe those mortgage rates will come down. So I think right now, it's also very zip code dependent. Where I'm based in the Northeast US, we don't really see a housing boom. We kind of skipped a lot of that during the whole housing boom this past couple years. And then we're still, whereas other markets had a much sharper rise, basically where people are kind of moving to. And so I think it's zip code dependent, and I think there's still residual, kind of euphoria there. But I think most signs show that at least on a nationwide average, we're kind of leveling off from that sugar high we were in terms of housing.
What else is lagging? Because I know you mentioned unemployment numbers, and I've seen some, headlines online already of companies like Amazon deciding that they're going to end their warehouse leases and maybe contract a little bit. And then I also know that the wheat situation in Ukraine is going to probably have effects on other countries in Africa, potentially spark famines. Where are things lagging that might affect all of this?
So unemployment is pretty lagging as far as the economy is concerned. We're starting to see initial signs of initial claims starting to rise, initial jobless claims. And so we're seeing very early signs of slack in the labor market. But the official unemployment's low. Like a lot of other indicators, like the leading stuff that kind of comes before unemployment has already been flashing, if not red, at least yellow. And so unemployment's kind of slowly starting to maybe wake up to that and maybe start to drift higher. And then when you look at the commodity supply chain, basically oil and gas are the master commodity, and then it trickles to everything else.
Yeah.
So now the cost of running equipment to mine copper is higher. And then the cost of making fertilizer is higher, and therefore the cost of food is higher. And then when you have Russia and Ukraine responsible for a significant portion of the world's wheat exports, that's an issue. And so we see a lot of protectionism among countries, and then you have less efficient distribution of some of those. So basically, I think food inflation follows some of the things we already saw, unfortunately. And so I don't think it'll be a straight line up. I think you can once it gets on magazine covers, which it is now. It's a lot of that's already kind of, I think, priced in, but then you can have pullbacks, then you can have bigger spikes in the future. So I think that this years ahead, I think we're going to have rolling issues where especially some areas are a problem in terms of commodities and prices.
Any forecasts when it comes to bonds? Because some people think that that's what's going to turn first before the Fed.
So I've actually been in that camp. I think we might be reaching a high in bond yields. But I'm watching for the market to confirm that, right? So it's not like I'd say it's a position loosely held that until we see higher highs, then I would change that. But assuming we don't see higher highs in yields, there's a case that even though the Fed's not done tightening, the market expectations about how much the Fed's going to be able to tighten, we might have already hit a peak there. And so I think that they're pivoting from looking at inflation to now looking at inflation as well as economic deceleration in many countries. and they're saying, how much are they going to be able to tighten? And so I think that we might have hit peak tightening expectations, even though we haven't hit peak tightening. And that's something I'm keeping an eye on.
Is it completely unlikely that Bitcoin will reach those all-time high levels again this year or even come near them?